So if you want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. Link will be in the description below. And basically, how did I make $66 trading Nike put options? So looking at Nike on 11:59. So let's see. And basically all of these trades, I look at them on the 30-minute time chart, and I said 11:59. So let's see. So basically this candle right here. So as soon as I saw that Nike had approached the 9-day moving average, my thought process was, okay, I'm gonna play a couple of put options as soon as it approaches the 9-day moving average, due to the fact that this candle right here, the 10 and 1030 candle, both had trouble breaking the 9-day moving average. So my thought process was the same with this same candle, because I was like, okay, if it's having trouble breaking that 9-day moving average, it's probably going to do the same thing, right? And so once I sold out the position at 12:33, right, that's how basically I made $66 trading Nike put options. So at 12:33, which is, let's see, not this candle, but $12.33. Hold on. Yeah, so basically this candle. So once I saw that, okay, I'm seeing that it's like now that the 12:30 candle, right, has finally broken above the 9-day moving average, right, I'm basically gonna wait and see if it can get somewhat close to the 20-day moving average. That barely happened, sort of. It did barely approach it, but it didn't really touch the 20-day moving average. So I was like, okay, I'm just gonna patiently wait and see if it can go slightly under the 9-day moving average. So at the 13 candle, once I saw the opportunity where I saw Nike struggling to break out of that 9-day moving average, I sold out the position, and that's how I basically made what is it? Yeah, that's how basically I made $66 trading Nike put options. So basically what you're trying to do, right, basically the strategy is this. So with any stock that you're playing, right, whether you're playing calls or puts, basically what you want to do is that you want to set up your moving averages, and you're basically trying to use the moving averages as entry points. That is, if you're playing, for example, my example that I just showed you guys, right, I waited patiently to play put options on Nike, and basically I played put options on Nike using the 9-day moving average. Why? Well, because this candle right here, the 10 candle and the 1030 candle, both had trouble breaking above the 9-day moving average. And so my thought process was the same with this same candle, the 12 candle. And so basically what you're trying to do is you're trying to use the moving averages as entry points. Now, way you can decide to either play calls or puts. In this example I just showed you guys, I played puts because I just explained to you guys that I saw those previous candles having trouble breaking out the 9-day moving average. And so I was like, okay, I have this same thought process with this very same candle, the 12 candle. It's probably going to have trouble breaking out of the 9-day moving average. It did. And so basically you're trying to use the moving averages as your entry points. Now, another thing that could have happened, right, in this scenario is that, okay, probably in the next scenario, right, the 1230 candle could have approached the 20-day moving average exactly. And so what would be the next step? Basically, I would buy more Nike put options as soon as it touches the 20-day moving average. Now, let's say it breaks the 50-day moving average, right? Next thing that I would do is I would buy more Nike put options as soon as it either approaches or touches the 50-day moving average. And then basically from there, right, let's say all of a sudden it starts, going, it decides to break the 50-day moving average. From there, you're basically just gonna have to use how do you say, you're gonna have to use resistance levels and support levels. So basically you would look on the 4-hour time chart, try to see like, oh, okay, maybe the next resistance level could be around 59. Okay, now that it broke 59, the next resistance level is 60. And basically you're trying to dollar cost average, that way when the position all of a sudden decides to spike down, right, then that way, yeah, basically if the position decides to spike down all of a sudden, your position will be in the green a lot more faster than if you just left it how it is in the beginning when you started. So basically you're trying to use the moving averages as entry points, and you're also trying to use the support and resistance levels on the 4-hour time chart. Basically I try to use the 4-hour time chart whenever I see that the let's say that particular stock decides to break above certain moving averages on the 30-minute time chart. I'll switch to the 4-hour time chart. I ignore the moving averages, but that is if I start seeing that on the, let's say like on the 4-hour time chart, right? Well, let's say right, let's say this candle right here, the 1230 candle, managed to break over the 20 and the 50-day moving average, right? What would be my next step from here? I would analyze it on the 4-hour time chart, and basically what would be my next entry point to get in? Okay, so it looks like the 20-day moving average would be my next entry point, because right now we're at this, oh wait, not this candle, but, well, what candle would it be? Hold on. Well, let's say we're under the 20-day moving average, right? Basically what you're trying to do is you're going to try to analyze, can you get into another position on the 4-hour time chart? And then basically if you can get into another position on the 4-hour time chart, by all means go ahead. That way when on the long term trend, right, of that stock decides to accept its fate of oh, I can't really go above the 20-day moving average, I had trouble going over it on the long term, then basically what would happen is that if that does happen, you would be right in your position or entry point of buying puts as soon as it approaches the 20-day moving average. And once it gets rejected by the 20-day moving average, you could see a spike towards the downside, and then you could start aiming for your exit positions, whether it approaches a certain support level. For me, basically, once it gets rejected by the 20-day moving average, I would sell out the position as soon as it approaches the 50-day moving average. So try to use support and resistance levels, try to use the 4-hour time chart somewhat, and try to use the moving averages on the 30-minute time chart as entry points. I'll keep showing you guys more examples. I'll give you another example tomorrow, but that is pretty much it. As always, this is not financial advice. If you have any questions, DM me at StephenFinance1 on Instagram related to the ebook, or any other related questions to this related to trading options. That's pretty much it. I'll see you guys in the next video. As always, take care and bye.